Good afternoon, and thank you so much for joining us virtually today. My name is Lorna Peters. I'm the director of the Small Business Development Center on the campus of Austin Peay. And along with the Chamber of Commerce and Stone, Rudolph, and Henry, we're excited to provide you with some great information today as it pertains to tax credits and, again, PPP updates. So thank you for joining us. Before we start the presentation, I would love to introduce you to Melinda Shepard. She's the Executive Director of the Chamber of Commerce. Hi, Melinda, how are you?
I'm doing great, Lorna. Thank you very much. Thanks for that nice introduction. We're also excited to be here with the Small Business Development Center in Stone, Rudolph, and Henry. The Chamber's here to unite and develop our business community. So if you ever need anything, please don't hesitate to give us a call. So thanks for partnering with us today.
Thank you so much, Melinda. Now, let's get to the presentation. I know you've all been waiting for that. I'll turn it over to Mr. Henry of Stone, Rudolph, and Henry. Hi, Mr. Tom.
Hey, good to see you again.
Great to see you.
We've been through a lot the last year and a half, some interesting things to navigate, ever-changing rules. So we're going to give you the latest version of what's going on right now. So I've got two members of our firm today, Kevin Chubit and Lauren Burton Ransdell, who work in different areas in our firm. Kevin works mostly in the tax area, and Lauren heads up our client accounting services group. So the two main topics are going to be update on the PPP program. That's where we're going to start with Kevin. Then we're going to cover, or he's going to cover, a few questions that we've been hearing from our clients. And if you have questions along the way, you can enter those in the chat section. So he'll give an overview, then we'll cover the questions that we've been hearing, and then open it up for the questions that you may have that haven't been covered. Then the next part, after he completes his, we'll talk with, or Lauren will talk with us about the employee retention credit. And these do interact with each other. That's why it's important to have both these topics covered at the same time. We'll follow the same format. She will do an overview. We'll give you some of the questions we've been hearing, and then open it up to address those questions that you may have that weren't covered previously. So I'm turning it over to Kevin. Take it away.
All right, we're going to start with a quick summary of what the PPP is. So technically, the PPP program was established by the SBA to assist small businesses with the COVID-19 shutdown. There's 2 rounds of PPP funding, and technically you were supposed to be able to lend until May 31st of 2021. Unfortunately, it ran out of funding at the beginning of May. I believe May 6th was the last day to actually submit a PPP application to a lender. There's certain lenders that you could still get funds from, but you have to be either female owned or like a minority business. And those lenders are few and far between. There's a list on the SBA website, but I think the funds are all dried up. So we're going to keep this mostly to forgiveness because I don't think there's anywhere you can get PPP funds right now. So really we're in the forgiveness season, and mostly for PPP1 loans that were lent anywhere in April, May, and June. Those are the ones that are going to be, take priority because your repayment dates are going to start. My calculation is in July of 2021, so in a couple of months when you actually have to start repaying these actual PPP funds that you lent for your business. If you lent in 2021, when the second round opened up, you have quite some time before you actually need to apply before you would start to make a payment. I know a lot of people probably want to get it out of the way, so you don't have to worry about it anymore, but just know that you're not in a time crunch where you need to do this tomorrow. You have till 10 months after 24 weeks, which gives you significantly more than a year to apply for forgiveness of this loan. So we're going to go over, 5 questions that most people ask, and hopefully this makes it a lot easier to obtain forgiveness when the time comes. So the first question is, I am ready to obtain forgiveness. Where do I start? The easiest starting point is going to be with whoever you lent the PPP loan through. So most people used a bank that was local just because they had a relationship, and a lot of institutions made you actually be a banking client to lend PPP funds with them. So you're going to look for a link from the bank through which you will apply for forgiveness. These links go out periodically. So you're just going to want to search your email for PPP forgiveness link, and that should give you the starting point for where you're going to apply for forgiveness. Because while it's an SBA loan, the bank is the lender, so you need to get your forgiveness application through the bank first, and then they will submit it to the SBA on your behalf. So the bank is kind of the third-party intermediary on these PPP loans. If you don't see it, if you went through US Bank, it's probably going to be a US Bank link coming through, but some of the smaller banks use a third party to help with the software development. So the main one is Biz2 Credit and Sage Analyst that I've seen. So if you don't see the link come directly from your bank, if you search one of those two, you'll probably have a pretty good shot at finding this link. Because once you get the link, that's the starting point, and that's what's going to facilitate the whole PPP forgiveness process. The links are nice because they generally have the required information you need. So you need the PPP loan number, the lender number, the amount, and the date the funds were dispersed. And these links have all that pre-filled for you. So it really makes the back end work significantly easier because you don't have to go chasing down documentation to figure out exactly when this PPP loan was funded for you. So that's the first question, and that's really the starting point. So we're going to try to do this in chronological order because the questions really all build on one another to actually applying for forgiveness. So the next main question is, what type of documentation are you going to need to actually get forgiveness of this loan? The main thing for PPP is payroll. So there's 3 forms that your PPP forgiveness application can go on, and really your situation is going to depend on the form you use. If your loan was under $150,000, you get to use form 3508S, which has a lot less legwork. You still need to maintain these documentations in case the SBA ever pulls your loan for audit, which they have. I've already had 2 that got pulled that are under 150,000. So it's not like they're not going to ever potentially look at this thing. So you still need to do the work. You just don't have to show it on the form. So payroll is going to be the biggest expense for forgiveness on the PPP funds. Now, when you're applying for forgiveness, at least 60% has to be payroll. So if you have a $100,000 loan, you can use $60,000 to payroll and $40,000 can go to other expenses. But you can use it all on payroll. You can break it up however you want to. If you don't qualify for the employee retention credit, it doesn't matter per se. You can just do all payroll and then you're all set with forgiveness. So for payroll, you're going to want forms 941. That's a required form. You're going to need to run a payroll summary for your covered period. So if you took the loan on April 20th, I think the covered period would end on October 5th. So you'd run a payroll summary from April 20th to October 5th, and those would be the wages that you could use for forgiveness in that 24-week period. You can pick anywhere from 8 through 24 weeks. So you could use 100 days, whatever day you want. It doesn't have to be 8 or 24. That's an update with the new PPP rules that they keep passing through. So really, you just need to make sure you have enough to cover this PPP loan if you want to get full forgiveness. Other things you might need are a state equivalent form. So I think in Tennessee, a lot of lenders are accepting the unemployment forms. So if you give the unemployment forms, the 941s, the payroll summaries, and if you have the 1096 and the W-2s, you should have more than enough documentation to substantiate your payroll. Now on the other expenses that you can use are kind of mortgage interest or rent, utility payments, covered expenditures, damages. Now damages are probably not super common because they had to be due to looting or rioting. So hopefully that didn't happen to anybody. But if it did, you could theoretically use those expenses on PPP forgiveness. And there are a whole bunch of other ones. But if you are going to put these on the PPP loan, you need to be able to substantiate them. So, utilities, you're going to have to pull your utility bills during this 24-week period or however long you choose. Rent, you're going to have to pull your rent payments. Mortgage is the same thing. So as long as you have the documentation, it's really easy to calculate the numbers, but you want to have the documentation in case your loan is ever pulled to be examined by the SBA. So next, we're going to go over the forms that you're going to use to actually apply for PPP forgiveness. Now, there are three actual forms. They're Form 3508, 3508EZ, and 3508S. The language in the actual SBA, though, is there's a lender equivalent, and a lot of lenders utilize the lender equivalent, and it's going to end up breaking down to the exact same information on these three forms. It just presents a little bit differently. But at the end of the day, it's going to end up making it on a Form 3508, a 3508EZ, or a 3508S. The first one we'll talk about is a 3508S, because if you look at PPP statistics, 90% of the loans are eligible to go on this form. And essentially, if your loan was under $150,000, you should be able to use this form. You still have to do the calculation on the back end, but it's not going to end up making it anywhere on the form. You just kind of put down a number that you can justify, and that's how you'll get forgiveness. This form, if you're a sole proprietor, you could do it in about 3 minutes. If you have employees and you're under $150,000, it takes a little bit more legwork. I like filling out these forms because I can do it so quickly. But if you have to use the other ones, it's not the end of the world. It's just much more labor intensive in terms of the calculation. So now we'll go on to the 3508 and 3508EZ. They're essentially the same form, but you can use the EZ if you meet two criteria. And it essentially says you did not reduce the salary or hourly wages of an employee by more than 20% during the year, and you did not reduce the actual number of employees. The pay reduction is kind of vague. Well, not vague, but if you reduced somebody that makes over 100,000, you won't fail this test. But if you took somebody from $15 to $10 an hour and they don't make over $100,000 during the year, then you did fail the test. So it's just something to be aware of. So really, what they wanted is, if you were going to cut costs, cut them with the highly compensated employees and kind of leave the lower earners alone. But those are the three forms: the 3508, the 3508EZ, and the 3508S. And like I said, it's lender dependent. So most lenders have now updated to recognize the Form 3508S, but some haven't. So unfortunately, if your lender did not update their software or whatever they're using, you're still going to have to do the legwork. Even though you could read the SBA website and it doesn't require you all to do it, you need to satisfy your lender before you can even get to the SBA. So a lot of it is lender dependent. And once you satisfy them, you're good to go. So that's just something to be aware of. It's not, hey, the SBA said I can use this easier form. Well, if the lender hasn't recognized it, then you have to do the other form that they're providing. Now we'll move on to what happens if you don't apply for PPP forgiveness. So the PPP is technically a loan. I think a lot of people are under the impression that it was free money, but it is technically a loan. It's a 1% loan, and it's due over 2 or 5 years, depending on when you actually applied for it. So if you applied before June 5th of 2020, your loan has a 2-year maturity. So you're going to repay it over 2 years. It's 1% interest. And so you're probably in the demographic that wants to apply for forgiveness sooner rather than later, so you don't actually have to start repaying the loan if you qualify for full forgiveness. Anyone who went after June 5th, 2020, your loan is 5 years at 1%. There's no rhyme or reason why they made this change, but they extended it from 2 to 5 years. So like I said earlier, after the end of the covered period, which is anywhere from 8 to 24 weeks, but they give you out until 24 weeks, from 10 months after that date, that's when you would actually start repaying this PPP loan. Now, I know I've seen some lenders in the beginning weren't up to, nobody ended up actually knowing what was going on in the beginning. So some people had to start repaying early, but I think most of those problems have been corrected. The guidance and the rules for this just changed so quickly and so randomly that it was really hard for everybody to keep track. But I think now that it's pretty much over, everybody is kind of on the same page. So again, if you took the loan in April or May or June, you're going to be the business or person that wants to apply for forgiveness sooner rather than later, because your time is coming to actually start paying on the 1% loan. And then the last question is, how do PPP and ERC overlap, and how should I prioritize if I qualify for both? That's kind of why we had these go together, because this is where you're going to want to sit down with, whoever you use for your accounting to see if you qualify for both. And if you do, you're going to want to have a sit down with both sides to make sure you're maximizing your benefit on the Paycheck Protection loan forgiveness and the employee retention credit. My thoughts are you probably want to get your PPP loan forgiven first and then get the ERC later if you qualify, because the PPP is essentially free money into your business if you do end up getting it forgiven, whereas the employee retention credit is a percentage of money that you've already paid out. So I think if you ran something in Excel to look at what the maximum benefit would be, I would bet that getting your PPP fully forgiven and then worrying about the employee retention credit would end up putting you in a better spot from just a total dollars perspective. And with that, I think that's what I have for PPP. If anybody has questions, feel free to post them. I know we went through that kind of quickly, but we're really just in the forgiveness stage. So it's really just, can I get this loan forgiven? How do I have to do it now? And what steps do I need to take to actually get the lender to send my forgiveness application to the SBA?
Okay, thanks, Kevin. Dr. Peters, have you had any online questions submitted while we were going through that process?
No questions so far.
Okay, then we're going to move on to the employee retention credit with Lauren. We'll cover that one.
Hi, good afternoon. So going to start out with the American Rescue Plan Act that passed in March of this year. It covers the ERC and then also the FFCRA credits that are still out there for people taking COVID sick time. So this act restarted the bank of hours starting April 1st through September 30th of this year. So if you are an employer who is participating in providing sick leave credits and pay to your employees, that restarted the bank of hours. So if you had an employee who had previously exhausted their hours last year when this was under the CARES Act or the Consolidated Tax Act, those hours have been restarted. It also expanded covered reasons for leave to include time to get the COVID vaccine, if you're recovering from adverse reactions to the vaccine, awaiting test results for COVID-19, having had close contact with someone with COVID-19, or at the employer's request. Those last three items, it really clarified what was covered, because the last two acts kind of left a lot of questions there. So employers who are participating in this can now expand for those above reasons, but the employer is not allowed to discriminate against their employees, against full-time employees, highly compensated. So if you offer it to one employee, you've got to offer it to all of your employees. Also, this act extended the employee retention credit to third and fourth quarters of this year. Lynn, can you advance the slide, please? Thank you. All right, now this covers the employee retention credit for 2020. So previously, if you had a PPP loan, you were excluded from qualifying for the ERC. So this gives a nice little flow chart of, do you qualify? You can go through and see if you qualify. So for 2020, we dealt a lot with businesses that were fully or partially suspended. And so if you were fully or partially suspended due to a government order, then, you have to look and see, did your business have 100 or fewer full-time equivalent employees in 2019? If you did, you qualify for the ERC. If you didn't, then the question is, did you pay employees who were not providing services? You paid them that weren't, employees that were not working that time, so you paid them to stay home, then you qualify for ERC. Of course, if you didn't pay the employees, there's no wages to report for that credit. Now, because Tennessee was only partially closed and fully closed for a short period of time, most employers don't qualify under that rule. Where we're seeing the majority of people qualify is if you had a reduction in gross receipts that was for more than 50% as compared to the same quarter in 2019. So 2019 is the comparison year for 2020. So if you had a reduction of 50% in your gross receipts, you qualify for that quarter. Automatically, if you qualify for that quarter, so where we see clients that start to qualify or second quarter 2020, then they automatically qualify in third quarter. So then we have to look at, in third quarter, were their gross receipts, did it go above 80% for the same quarter in 2019? If it did, that would be the last quarter they qualified. If they haven't met that threshold yet, then they would qualify again for fourth quarter. So the importance that talking about 2020 is up until the end of 2020, if you had a PPP loan, you didn't qualify for this. Now, retroactively, you may qualify for ERC. So we'll move to the 2021 slide, and you'll see that most of the same qualifications are the same. The only difference is that in 2021, your reference period is still 2019, so we didn't advance to 2020. You're still going to look at 2019 for that quarter. But instead of having a first quarter reduction of 50%, now we're looking to see if your gross receipts in the previous quarter were less than 80% of the same quarter in 2019. So more employers are able to qualify because that reduction is less. Also, a big change for 2021 is that the credit is 70%. So, and it's also a wage cap of $10,000 per quarter. So for 2020, you could take $10,000 for the year. So that was for all 3 quarters. So if you qualified for all 3 quarters, you had $10,000 wage cap per employee. So, and it was a 50% of the wages paid. So the max credit you could get on an employee for the year was $5,000. For 2021, the max credit you could get for an employee in 1 quarter is $7,000. If you qualify again in second quarter, you can get another $7,000 tax credit. So, you're getting 70 cents on the dollar for what you pay out. That also is why it's important to make sure if you took PPP 1 or 2, that you're making sure that you're getting those funds forgiven before you jump in and take ERC, because PPP is dollar for dollar. So, the best practice is make sure that that loan is forgiven, and then apply for ERC to pick up any excess wages you may have for that quarter. And to the next slide, Lynn. All right, and this is an interaction with a PPP loan. So the first example we have here is a company that took a loan amount of $100,000. They also paid $100,000 in qualified ERC wages. When they reported their loan forgiveness, they reported the $100,000 in wages, and they were fully forgiven on their loan. Because they used all of their wages for PPP, there was nothing left over for ERC. But if we look down at the next one, they had $50,000 more in qualified wages during that time period that they qualified for both the PPP and the ERC. which allowed them to have $50,000 in wages, which would allow them a $25,000 tax credit for 2020. So it's really important to know what information is used on your loan forgiveness application. Also, if you have other qualifying wages. So if we go down and look at examples 3 and 4, they received a $200,000 loan amount. They had qualified wages on both examples of $200,000. They reported $200,000 of wages on their loan forgiveness, but example 3 did not pick up they had $70,000 in qualified wages, but they did not report it on their loan forgiveness application. So that left them with no available funds for the ERC. But company 4 reported those, and they were able to pick up $70,000 in qualifying wages to report on their ERC. So for 2020, for clients who've already filed their loan forgiveness or are in the process of that, you know, it's important to look and see what other qualifying expenses do they have, so that way it frees up some wages for the ERC credit, and then to go back and amend those 941 forms to pick up that credit retroactively. Lynn? All right, and so these are some questions that we're seeing come through is, what business is eligible for an ERC? So to be eligible for the ERC, you have to be in business for 2020. If you're claiming for 2020 or 2021, either have in full or partial suspension due to a government order, or a significant decline in gross receipts to be able to qualify for that. And then of course you also have to have employees. So if you're a self-employed individual, you don't have employees, this isn't a credit that you would qualify for. Now, what is a significant decline in gross receipts? So we have 2 different definitions. For 2020, it's a decline that needs to be more than 50% as for the quarter as compared to the same quarter in 2019. For 2021, that decline needs to be more than 20% compared to the same quarter in 2019. So 2019 is the standard reference across the board on that. And then what are wages paid to an employer, paid by an employer who are related to, are wages paid by an employer to employees who are related individuals considered qualifying wages? So if you're a business and you employ your children, a spouse, other family members, those wages are not qualifying for the ERC. So if you have a child, a brother, a sister, parents, a niece, nephew, grandchildren, those wages do not qualify to pick up the ERC. So, you know, one of the things that we see is that some small businesses are limited when they have, you know, family members working for them. And then also if the business is a corporation, the related individual cannot have 50% more share in that corporation. If they do, they don't qualify for the ERC credit. So you have a shareholder that receives wages, they're 50% or 60% shareholder, they would be excluded from those calculations. And I ran through that pretty quickly.
All right. Does that cover your questions that we knew about in advance?
That covers my questions we had in advance, yes.
All right. Dr. Peters, have we had any questions submitted?
No questions submitted. You must be doing a great job. No one has submitted any questions yet.
Well, I've got some notes I made going through there that I thought we could discuss, some areas that have been constantly changing or a little unclear as to how things are addressed. So starting with on the PPP, so I'm throwing this one to Kevin. A sole proprietor means and no employees. Even that was probably the most confusing thing as I went through tax season talking to my self-employed clients. Nobody thought they could apply for the loan because they didn't have employees or they weren't aware of the program whatsoever. One of the two, but the name of it's Payroll Protection Program. Those are the 3 Ps. So you might touch upon, well, first of all, initially it was based upon self-employment income for a sole proprietor, which could be farmer or Schedule C, a business. It was their net income. Then the farmers got changed to gross income up to 100,000. Then the small business owner got changed to gross income up to 100,000. So some people had already applied for loans. They couldn't reapply. A lot of people were unhappy. And then a lot of the people I told towards the latter part of tax season, which just ended last week, they couldn't get funding because it cut off so soon. But on those types of applications where there's no employees, and obviously that means there's no payroll, how do those people qualify for forgiveness, Kevin?
They actually have the easiest situation because the lending formula and the forgiveness formula are the exact same. So it's just, gross receipts times 2.5 divided by 12. And that should have been your PPP loan amount. And then the forgiveness formula is the exact same. So you're going to file form 3508S. You can just make the total amount to payroll and then you should be all set. Now, if you went earlier in the process, it was different. You didn't get to use that formula. So you probably ended up getting significantly less money than you would have obtained had you waited. So unfortunately, what we realized with this whole PPP thing is it paid to wait. So if you did lend early, you're probably going to have no issue actually getting your PPP loan forgiven. If you went late, again, it should be a 1-for-1, no questions asked, and then you're good to go. The only issue is if you somehow got more than you were qualified for, then you might have to dig into your other receipts to actually get forgiveness, because the max that a sole proprietor can get is $20,833.32. And it's calculated by taking 100,000, dividing it by 12 and multiplying it by 2.5.
We do.
Go ahead.
We have a question.
Okay.
And it's about the EIDL loan. I know we did not discuss it, but just want to ask for the individual watching us today. The question, do you have any information on the EIDL loan number 2 and on any forgiveness as it pertains to the EIDL?
Kevin, I can handle that one, or you can, because he's talking number 2. It's not the grant number, it's the loan.
Yeah, I try not to mess with these because it's an actual loan. So I put that on the, if you're going to do it, because it's either 2.5 or 7 or 3.75%, right, of an actual loan. It's not, money that's going to get forgiven. You're going to have to pay it back.
Right. Yeah, that's my understanding too. Now, actually, I thought you were going to cover the next item I had jotted down, which is related to PPP. So when this program first came out, actually the first money I saw come out was direct, and it was those grants. Well, I think they may have been called loans, but they were up to $10,000, and a lot of people, for a while there, I think they were doing $1,000 per employee. It was all over the place. They said that offset forgiveness. So if you received, say, $5,000 and a PPP loan, initial calculation, I believe, was that you would still be on the hook for the $5,000. Kevin, that did change, right?
Yeah, that changed. I heard that the SBA was going to make that change on their end. If you had provided, enough to get the whole forgiveness, they would just kind of wipe that remaining anywhere from $1,000 to $10,000 away. Because in the beginning, it technically did reduce your forgiveness amount, but now that we don't have that problem anymore.
Right, but I'm referring to the first disbursement. the SBA followed up those initial applications for that grant money. Well, I call it a grant. I'm not sure what's the terminology they use, but round two, when they started contacting people, asking if they wanted to continue in the process or whatever, it was a little confusing, but that was a true loan. And there's no forgiveness provision for that one, for EIDL number 2. I think the L does stand for loan. So from the beginning, all of the disbursements had the word loan associated with them, but the first one was more like a grant. And it did initially affect the payment of the repayment of the PPP. So that's an issue that, you know, I don't know that it was always clear to people that would never be forgiven. That one does have to be repaid. One other thing, and this is kind of for both Kevin and Lauren, that I've seen some guidance on, you know, some of the ERC information came out after the opportunity to apply for forgiveness had come about. So some people had already applied for, and some received, forgiveness of the PPP loan before the rules on the ERC came out that allowed you to do both. Because initially you could only, if you did PPP, you could not take the ERC, and that changed. So all these rules kept changing, sometimes to your benefit and sometimes to your detriment, most of the times to the benefit. And Kevin, you're right, usually waiting helped, except when they ran out of money. And then it was all over. So on the PPP program. But what I've seen guidance from the IRS, this is an IRS thing because they govern the payroll tax rules, is that if you applied early for PPP and you threw everything in there, you know, all the add-ons that you could, like rent and all of that stuff, you can take the approach that you count the things that would not affect your ERC first, and any excess you can use for the ERC. Now that's if you gave them too much. But see, the easy thing to do initially was to just send in the payroll, because you didn't have to dig out a whole lot of other documentation like Kevin was talking about. And you didn't think it had any ramifications for any other reason. So if you just submitted payroll, period, any of that's in there that qualifies for ERC can't be used now for ERC. There's no process or no opportunity to amend the forgiveness application. That's right, Kevin. That's what I've heard from more than one source.
Yeah, that's true. So unfortunately, in the beginning, when this first started, you couldn't get both. So, you know, and the banks will or the lender will stop looking at your forgiveness documents once you give them enough to satisfy the loans. That's how it went. So we would, in the beginning, just give them enough payroll to satisfy this loan because that's what the rules were. And unfortunately, if you happen to be one of those people that qualifies for the employee retention credit as well, you're probably in as the worst shape possible in terms of getting both. But, you know, at the time, nobody actually knew that you could get both because it was set in stone that you couldn't. And then they retroactively changed that, you know, and once the second round came out.
Lauren, when that change occurred, and it might have been prior to this, when did the 941 first have a way to apply for the ERC on the form?
So that came out in second quarter, and for second quarter of 2020, there was actually a form that was only used for that quarter, because there was also, since ERC and the FFCRA credits overlapped into the last part of first quarter, they added a additional line item, so you could add in, I think it was from the 12th of March through the 31st of first quarter 2020, that you could actually add in those wages, so you wouldn't have to go back and amend the first quarter payroll reports. So
what was that other the other credit you kind of mentioned in passing there?
So it's the extension. It's basically an extension and change to the FFCRA credits, which is the family sick leave. But underneath the American Rescue Plan Act, it expanded. And so you actually see some guidance where they call it the ARP Act credit, which is, it's still reported like the FFCRA credit. It's just changing some guidance.
Is that the one that has a parallel for self-employed people on their
Yes.
1040?
Yes.
Okay.
Now, I'm not
That-
sure if
that's-
that flows into 2021 as well for the self-employed individuals.
Right. We haven't seen that yet, but in this past tax season, and if you're self-employed, you might want to make sure you took advantage of this. If you were basically quarantined for COVID because of the government shutdown, the doctor's orders, or taking care of someone who was, there's a credit for your self-employment tax based on up to 10 days of being in that situation. So that's not either of the credits we're really discussing right now, but that's one for self-employed people. It's sort of the parallel to the payroll tax credit, because the self-employment tax for self-employed replaces the FICA and Medicare taxes that are withheld from a W-2. So probably more than you wanted to know, but if that's something that could have affected you, the maximum you would have gotten, if I remember correctly, was $5,110 if you were out 10 days and you were maxing out on Social Security last year. One thing that was interesting in the way this rolled out, I believe they made it available to take the ERC with a PPP loan. Was that the act that was signed at the end of December, I believe?
Yes, December
so
27th.
So then everyone except had already done the first 3 quarters of the year, not the payroll reports. The fourth quarter way to fix that really wasn't described or made available by the IRS until like the end of January. Or explain how that went down, and then what people need to do if they want to look back and see if they qualify.
So the IRS put out guidance around the 20th of January, about 10 days before the form was due, on how you could correct, if you wanted to pick up the ERC, instead of going back and amending, you could report those qualified wages on fourth quarter payroll reports. Unfortunately, for a lot of clients, there just wasn't enough guidance, and those forms had already been filed at that time. So of course now fourth quarter forms have all been completed. So, to go back and pick up any of that, really the best way to do is to amend it quarter by quarter. So if you had qualifying wages in first quarter or second quarter of 2020, that's reported on the second quarter, on a second quarter 941X, and same for third quarter and fourth quarter.
So, and how do they get the money that they would be entitled to? How does the mechanics of getting the money happen?
So it is kind of a slow process. All 941 forms are paper filed, and the IRS is very backed up with processing returns in general, but especially those paper returns. So once the IRS processes your amended return, then they'll issue that credit to you by check.
Okay. Have you seen that happen yet? Anybody gotten a check yet?
Not necessarily on the corrected ones. I believe we've had some clients that picked it up in second quarter because they were under complete shutdown. They didn't have PPP. So that, that was under the initial guidance. So we knew we could take that credit in the beginning. I believe they've already received their funds, but that was almost a year ago processing those returns.
Okay, so if you've got the credit now, so we're into the second quarter of the year, then do you then on the form, do the mechanics of the form say if you're not going back and fixing one, but you're putting it on a current form and you qualify for it right now? So does it simply reduce your tax due on that form, or
it does,
and you can carry it forward if you want, or
you could, yes, you can carry it forward, or you can have them issue a refund. So the only the only time I would recommend doing that is if you don't have, if say we're in second quarter right now, you don't have PPP2 or PPP1 that you would be pending approval or know that you'll be submitting, you want to go ahead and take that credit, you could do it on the second quarter form, and then the IRS would refund you just like they do any other time you had an overpayment on a 941 form. You'd get that check in about 6 to 8 weeks.
And if you were certain you could do that, you could short a deposit.
Correct.
In effect, get to keep that money and get immediate use
Yes.
of the money if you needed it. And what kind of dollars have you seen involved in these credits for different employers?
I think the largest that we've had has been about 300,000, but that was a combination of the ERC credit that they qualified for in first and second quarter. So we reported it only on second quarter 2020, and then also the COVID sick leave credits. So that was kind of a combination of them both. It's easier if you have higher, compensated employees that they meet that 10,000, like in 2020, they meet that 10,000 in a single quarter. It's easier to qualify, especially if maybe you only qualified in one quarter due to a government shutdown. That way you can pick it up all in one quarter. But the issue that we're seeing, and again, it's because the guidance has been retroactive, is that some of these employers, they didn't take the PPP, or if they did, they took it later. And there wasn't a whole lot of guidance out there on the ERC at the time that there was the closure, but they just didn't pay their employees during that time. The employees only got paid for the time that they worked. And so if they weren't working due to the closure, they were likely collecting unemployment. And so there's no wages to report for that credit.
Okay. All right. You also had covered a topic that about what wages would qualify based on related parties, family members, that type of thing. So I was wondering, Kevin, are you aware of any rules along those guidelines related to the PPP wages that can be submitted or that were initially used for the application for the loan?
So PPP, there's no wage limitation. So on this last question, if you qualified for both on the PPP side, you can pick what wages you use. So we would use all those people first that were ineligible for ERC, and that frees up the rest of the wages to potentially get the employee retention credit. So the way I've seen it done is you want to knock out your related party people first on PPP, and then your highly compensated employees, because they're going to be limited on the PPP side to 100,000 per the covered period. So the maximum is $46,154. So say if you paid them 57,000, there would still be 10,000 freed up to take the employee retention credit on. So that's kind of where the back end work is done, and that's how you would maximize both the PPP and the ERC.
Okay, so there was no rule related to being related parties and that type of thing. That's what I had thought was the case, but I wasn't positive that that's how it played out. Now I do know that, especially on the PPP loan, there was massive confusion out of the gate because this thing launched so quickly, and banks were doing lots of different things. Different banks doing different things. On the forgiveness, you said like before when you were presenting that it settled down. They kind of got their hands around what the SBA wants on the forgiveness thing. But I know from the beginning, and in talking with you, you've mentioned, and I've seen some people that received PPP loans that really weren't eligible. And now they come to the forgiveness section. And what are their options? What have you seen happening there, Kev?
So I advise them to pay it back because technically you should have never received the fund, and then you don't have anything to worry about. But with how simple the under $150,000 application is, you could probably get it to be accepted from a lender. That doesn't make it right, but because you don't really have to upload much documentation with the, under $150,000 loan, you can pretty much get it to where you need it to go. The problem is if you ever get, selected by the SBA for exam, they're going to ask you for these documents and you don't have any. So, I had people in real estate who receive PPP funds, but they don't have any employees because you can't use 1099 contractors to actually lend. So unless you had income subject to self-employment, you should not have received a PPP loan. So those are the people that to be honest with you, I don't know what you would do. You'd probably have to talk to the lender and say, I received this PPP loan. I probably shouldn't have received it. And then you pay it back.
Yeah, I would strongly recommend that they talk to their lender, but I think there is a requirement to pay it back. I think that if I remember in one of the educational sessions I sat in on, that if you got any money, if you discover later that you should not have gotten, that you're required to repay it, even if you had the expenses to get it forgiven. One of the things that's kind of interesting too in there is that your business could actually, in the final version, correct me if I'm wrong, Kevin, the final version, you could be losing money because they based it off your gross income, not your after expenses income. And then you would still automatically qualify for forgiveness because it's just considered that you paid yourself that money. And if you're self-employed, you were only counting yourself as one employee, that because you spent that, automatically you're forgiven. And you don't even need to show that you wrote a check out of your business for it. Is that pretty much true?
That's correct. That's why the self-employed ones are so nice, because it's really cut and dry, the lending and forgiveness aspect. But yeah, your end of the day profit or loss could be a loss, but as long as you had gross receipts, you theoretically could have received a PPP loan of up to $20,833.
And you don't even have to have the gross receipts the next year to justify that. It's just that it's automatic, but you do have to still be in business. That's one of the requirements. Okay. So if someone, I'm throwing this one to you, Lauren, if someone has a PPP loan not yet forgiven, and they also have payroll, and they know that they qualify for the credit, but they haven't done anything about either one of these, where should they start in the process of trying to maximize both of these simultaneously?
So I think looking at and doing the loan forgiveness application, selecting the employees to guarantee forgiveness, and then as soon as they have the loan forgiveness confirmation from the SBA, then doing the ERC credit.
How long do you have to file for those amended reports?
You've got a while. I'm not sure what the limit on that is. I'd say probably 3 years.
Yeah, most things at the IRS are 3 years. So it's not a thing where you have to move real quickly, but you need to move on it. One of the things that can be tricky in all this is, you want to use your computer or your payroll provider's computer system to kick out just a report that covers a time period and turn it in. But it may not be that simple, like picking and choosing family members. That's got to come out. What if you had, an employee for one period of time, they qualified for ERC, and then another portion in there they didn't. You're going to have to edit that out, and you really do need to have that on file in your records, even if you don't have to submit it, to be sure that you've got that covered. Kevin, you mentioned an EZ form. Now, is that easier than the S? Because you mentioned usually you like the S form.
So the S form is the easiest one, and the EZ form is actually the same as the larger form. You just have to hit 2 requirements to be eligible to use it. So essentially, you can't have gotten rid of employees during the covered period and not rehired them by the end of the year. And you can't have slashed payroll for anybody by more than 25%. And then you can use the 3508 EZ. Now, You technically still have to do the work on the back end. It's just not going to ever show up on the actual PPP forgiveness application. So in terms of like getting it through your lender, that form's easier because you don't have to upload the Schedule A and the highly compensated employee schedule. But you still have to, do the work so you can justify using Form 3508 EZ. But in terms of actually getting the form through the lender, it's significantly easier because the documentation upload requirement is a lot less.
And the what person that's self-employed, no employees, they use the S?
Correct, because they're under $150,000.
Right. Okay, so what's a little confusing in that the way they name those forms is that EZ is not the easiest one. S is. So
Correct.
that's the way a lot of government forms seem to go. Sometimes they're not quite what you expect. One caveat in all this, and we're not attorneys, so I'm just throwing this by everybody. We work in the world of tax and law and arguing tax law, and we can do that, but we're not attorneys. When we're dealing with 941s and we're dealing with income tax returns, we know the ins and outs of that. But when you get into this SBA loan application and forgiveness application, I've been warned in multiple sessions of continuing education that, for instance, trying to get one forgiven you should have never gotten, that's not something where the IRS is going to say, well, you owe us some interest, some additional tax, that type of thing. My understanding is that can be considered fraud, and it's a much more serious consequence, even if it's a misunderstanding, than it is on a tax issue where you're just trying to be a little aggressive in a gray area, that type of thing. So back to what we had talked about on the forgiveness issue, if you shouldn't have got the loan, I would definitely talk to the lender and make sure you know what you should have gotten and whether it's legit that you can forgive it. Because Kevin, correct me, but I believe it first goes to forgiveness by the financial institution, and then after that it goes to the SBA before you're truly forgiven. And even then, they can come back for like 6 years, I think, and take a look.
That is correct. So when you apply, it goes to the lender first, then the lender sends it off to the SBA, and then once it's actually forgiven, you'll get the notice from the lender saying, congratulations, the SBA has forgiven your PPP loan. But then you still have to maintain the documentation and the year requirement depends on how much the loan is, but I think it's anywhere from 4 to 6 that you have to maintain these documents. So you don't want to just, wipe your hands clean of it right away, because they can pull, this loan at any point before the, years are up. Okay.
Well, it looks like, go ahead, Lauren.
I think on the ERC, with the ARP that went out in March, there was a special rule on any forms claiming ERC that the statute of limitations to look back at that is longer than it would be for the other forms.
So you're saying it's open for audit longer? Or it's
yes, or for a
amendment?
special review. There is a notation on that specific to the ERC.
Yeah, because there's been so much news about fraudulent activity in these areas that I'm sure they're very much on top of it now. So I think that pretty much gets our time slot full up to Dr. Peters. I don't want to keep people longer than we promised, so I'll turn it back over to you. And thanks for the opportunity to be able to share all this information with everybody on the webinar.
Yes, thank you so much, Stone Rudolph and Henry, Chamber of Commerce, and me from the Small Business Development Center. We want to thank you for joining us. We will provide the slides later on in a few days through email, and you will be able to also listen or review the webinar that we just completed. Thank you so much for joining us today. We wish you the best. On the screen, you'll find our information to contact any of us, and we are here to help you in any way we can. Have a great day, everyone. Thank you for joining us.